Assalamualaikum viewers, we have already prepared the trial balance incorporating both from the first phase of 10 entries and in the second phase of 5 entries. The first phase make the structure of a corporation and the second phase make the operation of a corporation. It means that it relates to the income statement. Certainly, we have already debited and credited these entries in the previous lectures and we have already prepared the trial balance. In this lecture, we will discuss how to make the income statement. I am Dr. Safdar Husain Tahir, Associate Professor, Lalpur Business School, Government College, University, Faisalabad. I did postdoc from UWA Business School, the University of Western Australia. Look at it, we have already made this trial balance in the previous lecture. Certainly, we are in the second phase and we have already prepared the trial balance in the previous lecture. In this lecture, we will understand how to make the income statement. This is the first phase. So the cash balance is 6,50,000. These ledgers account we have already discussed in the previous lectures and we have already reached at this is the trial balance. From the trial balance, how to make the income statement? This is the question, and we will understand this question in this lecture. Certainly, we have a different account, assets account, liabilities account, and owner equity account. And add up, we have some revenue account and we have some expense account. Only the revenue account and expense account you cut here and paste in the income statement. This is the income statement. So write in this way that Bright Future Trades income statement as of December 31st, 2024. Sales revenue 4 lakh. The balance in the trial balance and in the ledger account show that it is a 4 lakh. Cost of goods sold 2 lakh. Gross profit 2 lakh. Certainly, you minus 4 lakh to 2 lakh and then remaining 2 lakh. Operating expense, advertisement expense, that is at 20,000, salaries expense 50,000, total operating expenses 1 lakh and 10,000, net profit is 1 lakh and 30,000. Only you did that, you close the sales revenue account, cost of goods sold account, advertising expense, salaries expense, owner drawing, and all the account you close into income statement. After the income statement, certainly you prepare the statement of owner equity. You close the owner capital opening, that is 20 lakh rupees, add the net profit and less the drawing. The new capital is 21 lakh rupees. Certainly, the capital increase 1 lakh more from 20 to 21. This is the statement of owner equity. After closing trial balance, you have closed the all expense account, all revenue accounts, and also the old capital. Now it becomes the new capital. At this time, cash is this one, the 6,50,000. New capital becomes 21 lakh. All remain same. All remain same. That have a different balance: 7 lakh, 1 lakh, 12 lakh, 90,000, 50,000, this one, and this is the prepaid rent. This is not expired so far. It is also an asset. So its balance is 40,000. Credit balance 21 lakh, 5 lakh, and 11 lakh and 50,000. The total is after closing trial balance is 37 lakh 50,000 and is equal to credited 37 lakh and 50,000. In this way, you prepare the after closing trial balance. Thank you so much.